What if I told you that Bitcoin's next big move might not be about Bitcoin at all, or that your favorite tech stocks are now caught in a global power play? Let's break down how a new wave in the US China trade war is shaking up crypto stocks and everything in between. So, crypto and the stock market have officially stepped into a new phase of the global trade war, and the tensions are heating up. On April 15th, the White House dropped a bombshell. They're slapping tariffs of up to 245% on Chinese imports. Yeah, you heard that right. 245%. That includes a 125% reciprocal tariff, 20% tied to the fentanyl crisis, and Section 301 tariffs ranging from 7.5% to 100% on certain goods. Now, this isn't just about trade, it's about where your money goes next. According to Aurélie Barther, a lead analyst at Nansen, this move has pushed high value assets like crypto and tech stocks into a whole new stage of the trade war. We're now seeing the trade war shift focus to high added value sectors like tech and pharma. And unless one of the two sides picks up the phone and offers a real concession, we're looking at a rough road ahead for risk assets. And here's the kicker: crypto and US equities have been highly correlated since November 2024. And with the recent market dip, that link has only grown stronger. As Aurelie points out, investors are de-risking, especially when it comes to expensive assets. So what's the turning point? When does this roller coaster hit the bottom? Or does it get worse? The outlook? Nansen analysts think there's about a 70% chance the markets could bottom out by June 2025 and then, hopefully, start to recover. But yeah, that all depends on how these tariff talks play out globally. Meanwhile, over in China, they've brought in a new chief trade negotiator, Li Chenggang. Now, this guy's not new to the game. He served during Trump's first term and is known for being a pretty tough negotiator. Sources in Beijing say he's intense and very experienced in dealing with US officials, so expect some serious back and forth. But the real wild card? It's not China, it's the Fed. Now shift your eyes to the Fed. As trade tensions grow and inflation lingers, all eyes are on Jerome Powell, the chair of the US Federal Reserve. His upcoming speech during the May 6th FOMC meeting could seriously shake or calm markets. Analysts over at Bitfinex say that if Powell comes off too hawkish, hinting at delays in rate cuts because of inflation or geopolitical risk, then assets like Bitcoin could face more downside pressure. But if he strikes a balanced tone, that might actually calm investors a bit, especially considering that over the past week we've already seen some solid recoveries in crypto, particularly in smaller cap coins, which have bounced back 30 to 40% from their lows. As Bitfinex analysts put it, crypto isn't reacting because the fundamentals have changed. It's reacting because the market is thin and confidence is shaky. So the big question now, is this just a temporary shakeup or the beginning of something much bigger? Make sure you're subscribed and following because we're breaking it all down as it happens. Hit the bell, drop your thoughts in the comments, and stay tuned. We've got a lot more to cover.